Good morning. This is Bakes, Kevin Baker with Bakes Takes. Welcome to the podcast. This is for the week ending Sunday, October 4th. Hope you had a great weekend. First, bonds suck. Sorry, Mom. I know you don't like that word, but there's no other way to say it. Number 2, agriculture's perking up. And number 3, see number 1. My first take is, my portfolio. And this is just a small account. And I'm just going to keep my feet to the fire. Hero Esports is working. The other ideas that we've come up with have not. I've come up with have not. But I still think silver is going to work. The money printing is still massive. I think it's a normal consolidation, and I think it's going to work to the upside. Uranium, I think the uranium story is about the most exciting thing I've seen in a while, but it's going to be a 3-4 year grind upwards. I think the demand for uranium and nuclear power is going to be substantial, and I'm going to put up with this. Volatility has been vexing. You like the alliteration there, Mike? I'm not happy. It's a poor start, but it's only 3 months. And in terms of volatility, maybe it's too obvious, but we've got 6 days, whatever it is, to the election, and I just think there's all kinds of things that can happen here. And again, from a prior episode, I'm not Elvis Costello. Peace, love, and understanding isn't going to be coming up anytime soon, and I think volatility is going to pick up not only from November 3rd, but to January 20th, the inauguration day. So let's get this chart out of here because I don't like it. It's making me sick. Fan mail, this take, and I had a great conversation with Charlie, big fan, friend of Jack's, and my son, and he said, Biggs, why don't you talk about why you do this, your purpose, your past? And I said, okay, because we haven't talked about it, in depth in a while. So this whole idea is like I'm talking to my sons, Bobby and Jack. They often would, be going to an interview or working on a class project, and they and their friends would fire questions at me and say, what's the 10-year bond yield? Why do I give a damn? What does the expansion of the Fed's balance sheet mean? What themes are you looking at? What stocks do you like, etc. And I like it. It keeps me young, and I like to take my battle scars and put them to good use. So my story, real quick, was a broker back in the late '80s. Was newly minted in '87. I'd like to go back in time and punch myself in the face. My hubris was ridiculous, and then October '87 happened, and I realized, the stock market crash down 22% in a day, and I realized I didn't know what I was doing. A lot of the Wall Street analysts didn't know what they were doing, and so I went back to school, literally and figuratively, got my MBA, thank you, Babson College, and just read voraciously and studied voraciously, and soaked up everything that Jesse Livermore wrote and Peter Lynch wrote and George Soros wrote. Certainly William O'Neill, who I reference a lot on the show. I realized that technical analysis was helpful, and so I put that into my quiver and bring it out from time to time, or all the time, frankly. So I went through the 90s. With a mutual fund, 2 mutual funds actually, and saw the bull market, and then saw the final bubble. I saw the burst, the lost aughts, if you will, where stocks did nothing for 10 years. I've been on the long side, meaning we just own stocks. I've been on the hedge fund side, long, short. I've had successes. I've had failures, and pretty open about them. And I, ask you and invite you to eavesdrop on the conversation. I'm literally talking to Bobby and Jack as I do this right now, but I'd love to have you in the conversation. So that's why I do this. I want you to learn from my mistakes. And this is a team effort. I want your feedback. Tell me ideas, services you'd like me to add. I'm thinking about a number of things. A newsletter, for example. Perhaps an in-depth group over the weekends. All kinds of things. But I want your feedback. I'm looking at reaching out to college investment clubs, which is a new area that fascinates me, because even if the textbooks say how investments work, I have gone through the real world, and I want to impart my thoughts, and hopefully I can add some value. Anyway, next take is the podcast of the week, and this is all in. It's Chamath Palihapitiya, which is a tough name, but he's on CNBC so much that I've learned how to pronounce it. Chamath, I hope I'm doing that correctly. Jason Calacanis, David Sacks, and David Friedberg. They're angel investors and Silicon Valley entrepreneurs. Fascinating guys, especially Chamath. I like them all, but Chamath is I think, one of the best interviews on Wall Street. I was just listening to him before I came in here. His SPAC has just acquired Clover Healthcare. But I just think he's a very thoughtful guy, and I recommend the All In podcast. This past week, they obviously talked about the debates and the elections, and they wring their hands about that. You know my stance on that. I really don't care. I think Trump's going to win. I think that's going to be a surprise. I don't think the market's ready for that. That's my commentary, not theirs. But I really recommend their podcast. And also, Chamath talked about. He obviously has one of the most successful SPACs out there, Special Purpose Acquisition Corps. I think I have that right. And my view is, I don't have the chart up because I've shown it so many times, but SPACs happen in bull markets. And it's an easier way for companies to go public. I think some SPACs are good. I suspect Chamath is, because he puts his money where his mouth is, which is what he recommended on a CNBC interview recently. Is look where the incentives are aligned. If the manager of the SPAC is investing shoulder to shoulder with you, you're probably onto something. If the incentives are misaligned, run like crazy. So I'm not damning all SPACs. I just am saying the history shows that they peak in 2007 and they go away entirely in 2009. So there's a stock market phenomenon there that you should pay attention to, and I digress. Next podcast of the week is Compound Show with Josh Brown. It seems like I reference him weekly, but his content is really terrific in my opinion. He's the CEO of Ritholtz Wealth Management, and he had Kathleen Smith, the CEO of Renaissance, on his podcast. And if you are interested in learning about IPOs, the history of IPOs, the good, the bad, and the ugly of IPOs, I really recommend this. This is the fascinating stuff, and and this is. At 8 minutes, she talks about, this is historically a lot of IPOs, a lot of dollars being raised, and, warrants some caution. I'll just put it like that. At 41 minutes, she talks about Ant, the Chinese IPO, that her ex-US ETF, I'm forgetting the symbol right now, is going to be investing in. I'm looking for an ETF that has a private investment in Ant so that they're not buying it after the IPO pop. If you have ideas there, I'm all ears. Ant is a ubiquitous Chinese financial giant out of Alibaba, and I think it's going to be a big holding. I'd like to participate, and I'd love to hear your ideas. So there you go. You can leave that one in, Mike, okay? The reporters of the week. This is my next take, and this kind of goes to my intro. Bonds suck. inflation is, this is from James McIntosh in the Wall Street Journal recently, and inflation is already here for the stuff you actually want to buy. And I was just struck by this. I always love a good chart. And here, this is a long-term chart. This is going back 15 years. And annualized 3-month inflation is picking up. It isn't dramatic yet, but if it gets above this level here, I think it's going to be interesting, and the bond market is going to start sniffing it out, hence my original comment. The gap between everyday experience and what you see as the yearly inflation rate of 1.3% in August is pretty massive. The stuff we're buying is rising much faster, while the stuff we're no longer buying has been falling, but still counts in the figures. And I'm always happy to see him or the Wall Street Journal team put into a chart what we've all sensed and see. For example, bicycles are up dramatically. Medical care inflation is up. Newspapers, which I thought were supposed to be dead, those are up. Cable and satellite TV makes sense with all of us staying at home. Rent, not an insignificant item for many of us, is up dramatically. And so here's the stuff that where deflation is occurring. Food at work or school, city transport's down, makes sense. Hotel, suits. When was the last time you wore a suit? Airline fares. So the inflation that we feel is different than what the CPI headline would suggest. Now, the end of the article is what I think really brings this home. I mean, maybe the government can manage this deftly between the virus and the economy, where they give you the Goldilocks stimulus, the just right stimulus, and then they pull back just amount before the inflation picks up. That's a job I don't want. I think it's very unlikely. And Powell, Chairman Powell, is in essence said, we're going to overshoot. We're going to let inflation run hotter and then pull back. So given all that, I just don't see. I'll go into some more. My take. Inflation and bond yields expectations are low, and I think upside surprises are likely. Maybe not next Thursday, but I don't see how bonds do much to help you from here. So my next take, the charts of the week. I go through 1,700 plus charts every week, and that kind of plays into my thinking here. And I was thinking this on the drive over. I go through 1,700 charts. There isn't a bond I want to buy. There isn't a high yield ETF I want to buy. There isn't a muni ETF I want to buy. I certainly don't want to buy treasuries. I think it's tough slogging. Now, things that intrigue me, might be mundane. And again, I haven't made conclusions on this. But for example, corn, the corn ETF, yeah, they buy corn futures. Corn, that's a promising setup when you look at this chart. And what does it do? There's a nice base. You could call it a cup and handle if you're from the O'Neill camp. The volume is picking up on the far right here. These blue bars, if you're watching this on the channel, and I think this is a promising setup. That's all it is for now. And I want to hear your thoughts. When I Google, bull case for corn, and the top story goes back to 2014, I kind of go, all right, something new is going on. I don't know what it is, but I'm intrigued by this, and I'm going to be doing more work, and I'd love to hear your feedback. Next one is water. It's PHO, the Invesco Water Resource ETF. Again, not a conclusion, but look at that big volume at the far right. Something new is going on here. I don't know exactly what it is. Again, I just went through the charts over the weekend, but I'm bullish on water. And again, the bull. My assistant Google comes back with the bull case, and it's Flint, Michigan, 2016. So there's something going on here, and I'm going to be doing some more research. As I mentioned before, I plug all these new ideas into Google Alerts. It does throw out a lot of information. Some of it, most of it isn't useful, but every now and then you have some things that are, and I'll be reporting back, and I want to hear about you. The next one is the Guru Index, the Global X Guru Index ETF, GURU. I don't have the positions here. I've got them printed out here, but it was too late for the show. But this ETF apparently seeks out what the top hedge fund managers are buying, and I want to see what non-obvious names are in the portfolios. I mean, Amazon and Google are probably there, but are there oddballs in there that might lead me down other paths or you down other paths? And I'd love to hear, what you see out there. Crane Shares China. KFYP. I've been going back and forth with them. I called them. I emailed them. I just found out they don't own the Ant shares in the private market. They're going to be buying them in the aftermarket. That obviously isn't as attractive to me. Again, I'm trying to find an ETF that owns Ant privately. It's a massive Chinese company that is on everybody's phone. Ridiculously profitable, and if you have learned of an ETF where you can participate pre-Ant IPO, I am all ears, and I'd love to share it with our audience. Soybeans look like they've turned around. Look at the volume picking up. The moving averages are moving up. I don't know what the bull case is here, but I'm going to find it. And I invite you along for the ride. So, and wheat. Wheat looks great. So I'm not that smart, but you have, three basic agricultural commodities that are perking up on top of the inflation news that can't be good for bonds. It's probably negative for bonds. And, I go through 1,700 charts, and what do I have? A half a dozen of things to look at, and that's the way this goes sometimes. Is that and I like it. It's an exclusionary process to focus attention on non-obvious items. Yeah, we could talk about Tesla all day long. Who doesn't know about Tesla? Wheat. I think that's probably off the beaten path, and we'll see if it's worth exploiting down the road. So that's the show. Please also subscribe to my Bakes Takes YouTube channel. The audio is the same, but the charts are that I reference are on the screen. Follow us on Twitter @BakesTakes_ and other social media. Please use your voice memo app. Tape your questions. Email to bakes@bakestakespodcast.com. I'd love a video as well and include that on the show, or write if you prefer. I'll keep you anonymous if you'd like. Thank you for listening. Mike Wilson is my producer. Thank you as always, my friend. Have a great week. This is Bakes. Much needed levity. Ralphie, it must be the anniversary of his death because I'm seeing his videos cropping up a lot on my feed. Brilliant guy, passed away. I think he's hysterical. Ralphie May, Cuban Coffee. Rest in peace, Ralphie. Thank you, folks. See you next week. Take care. Bye-bye.